In this video, I'm going to share with you 3 stocks that I believe are very undervalued right now. I think they offer incredible upside potential over the long term. Each one of these 3 stocks is for a different type of personality. One is a straight growth stock. The second one is a straight, really nice, high-paying dividend stock with a proven track record. And the third stock is somewhere in between. All 3 of these stocks are ones that I've been buying outright in my stock ownership account, as well as trading options against. Before I get to my first of 3 picks, let me know down in the comment section below. Which one of those 3 types of investors are you? Are you primarily a growth investor, or are you a value investor, or are you a dividend investor? Let me know down in the comment section below. If you want to hit pause, go ahead and hit pause. I'll be here when you get back. This first stock I want to share with you that I believe is potentially undervalued was down over 30% until just a few days ago. After its recent advance, it's still down over 20%. It's one of those situations where you put a trade into a company that you really like, but then it drops a lot. Then all of a sudden you're worried, did I make the right decision? So I think many investors in the stock are probably trying to decide if they want to sell or buy more. Well, in this situation, I'm buying more. So this is stock I've been accumulating in my outright stock ownership account, as well as selling options against it. And why am I doing that? I believe Amazon has great potential over the next couple of years. And there's 3 primary reasons why I believe Amazon has a bright future over the next couple of years. And here you see them listed on the left side. First, Amazon has a cash flow machine in AWS. It's the newer part of Amazon, and its cash flows are continually growing. The second reason is think about how many subscribers Amazon has. Here you see that right now there's over 200 million subscribers to Amazon's Prime membership. That means if you took the population of the US, it's over half the entire population of the US. I know there's many Amazon subscribers that aren't Americans, but just understand that's a big number. That's a very captive audience for Amazon. And finally, this third point down here is one that I believe is really important. They are very serious about integrating AI. I was talking to a friend of mine this past weekend at dinner, and he was saying how Apple just kind of got left behind. And I agree. Apple has got left behind when it comes to AI compared to companies like Amazon. Amazon's putting AI into every possible part of their business. These 3 factors are the reasons why I believe Amazon has a very bright future. Anytime I'm preparing a video for you, I always like to pull in some extra information, something that maybe most of you or maybe none of you knew. So I'm digging through some interesting facts about Amazon. I found this one. And let me know in the comment section below if you knew this or not. But here's a fun fact about my first pick, which is Amazon. Did you know that originally Bezos wanted to call Amazon Cadabra? And he did that because of abracadabra. He wanted the name to signify the magic that comes from shopping online. And back then it was kind of like magic. It was like a fairy tale. But now shopping online is just a way of life. So why didn't he leave it as Cadabra? And if I'm getting that word wrong, I'm sorry, you can correct me down in the comment section below. Well, the reason he changed the name from Cadabra to Amazon is because the lawyer heard Cadabra and mispronounced it cadaver. Do you know what Cadabra means? Well, in English, it means corpse. So not really a name he wanted associated with Amazon. Now let me ask you, do you think it was a good move that he called it Amazon as compared to Cadabra? Probably so. I'm not one of these YouTube people that try and tell my audiences that everything is perfect and rosy. I've been a business owner for over 30 years, so I know everything isn't always perfect. So let me share with you the problem I have with Amazon, because I think it's something you want to think through before you invest in it. So while I think AWS is a gold mine, is becoming that gold mine, is already producing nice results, Amazon's retail business, it works on razor thin margins. That means Amazon has to work really hard just to break even on those packages that we get and then we return them 5 minutes later. I know, I do it too. You probably do it also. But as long as AWS keeps growing and AI is a big part of Amazon's business, I believe this company has a very bright future in front of it. But again, I don't want you just to take my word for it. Let's look at some real numbers. I'm not one of these guys that just say, hey, I think this one's undervalued, so you need to buy it. Well, I'm not that guy. Number one, I'm not gonna tell you to buy anything, but I will tell you what I'm buying, but I also wanna show you why I'm buying it. Now, Seeking Alpha is a website I do use on a daily basis. They have some nice articles and nice information about companies. And if you like what you see here on Seeking Alpha, as I talk through these 3 companies, I'll leave a link for a discount down in the description below. But here's a couple reasons why I think Amazon is potentially a good buy. Just kind of look at where it's priced at compared to its history of the past 5 years. Now, just so you know, before I buy a company, I look at the past 5-year history, but I also look at the past 10, 15, and even 20 years. But with Seeking Alpha, you only get the past 5 years, which is good enough for the sake of this video. So where is Amazon at price-wise as compared to the past 5 years? Well, here you see for the metric of P/E non-GAAP, it's trading at a 54% discount based on the past 5-year pricing. If you look down here more towards the bottom, you see that its price to sales, where it's not showing nearly as big of a discount, is just under 10%. If you look down here almost to the bottom, if you look at price to cash flow, notice it's trading at about a 34% discount. And then down below it, if you look at the forward projections, it's at about a 36% discount. So overall, a company I really like that I believe has a really bright future and it's also currently trading at a discount. All right, so here's my key takeaway for you for stock pick number 1, Amazon. In my opinion, Amazon is currently undervalued. It's been trading for the past 5 years for about a 55 PDE, and at the time of filming this video, which the market's been all over the place lately, but at the moment I'm filming this video, it's trading at about a 32 PDE. So currently, if you look at just that one metric, which I encourage you to look at more than just the one metric. But if you look at just this one metric for right now, it's trading at about a 30 to 40% discount. So if you can ignore all the noise in the market right now, which right now there's a lot of noise, there's a lot of fear in the market, but if you can ignore that, this might be one you want to consider adding to your position or starting a new position if you don't have one already. All right, so we did our growth lever. We did our number 1 here. Now let's move on to number 2, and that's our dividend chaser. Who of you likes dividends? If you like dividends, give me a big thumbs up on this video. If stocks had a personality, this next stock, EPD, would be like that neighbor that's always reliable. When it's raining, they go get your Amazon packages and they bring them inside so they don't get wet. They water your plants for you when you're gone. They're just a great neighbor. They're always there. They may not be the most exciting neighbor, but that's what makes them a great neighbor, is that they're dependable. In my opinion, EPD is the stock equivalent to that dependable neighbor. It's boring, but it pays you so much money. And because of that, it's one of my larger holdings. So let me tell you a little bit about EPD. Then I'm going to give you a negative about the company. And finally, I'm going to wrap it up by giving you some key metrics for you to keep in mind as you consider if you want to trade in this company. So first, why do I like them? Now, it isn't only about the dividend, as you'll see in just a minute, but EPD does have a really nice dividend. When I was preparing for this video, it was trading for about a 7.5% annualized dividend, and that dividend is very consistent and has grown over a long time frame. So if you like dividends, this is your guy right here. You want to consider this one. Why is it able to consistently pay out that dividend to us, its stock owners? Well, it's because it's in the pipeline business. You see that pipeline, they're not worried about drilling wells, are they going to hit a well today or not worrying about gas prices. They lock in these long-term contracts for people that do provide oil, and they get paid as that oil runs through their pipelines. What's nice about those pipelines is that they control and own those pipelines. They have this very expensive infrastructure that's really hard to replicate, which keeps a lot of people out of this business. These guys are one of the biggest ones in the whole world. So they basically have a cash register that continually prints money for their owners. And that cash register is one reason why I really like EPD. Even if it didn't have some really high dividend, I like a company that basically prints money no matter what's going on in the economy. Now I was trying to find you a fun fact about EPD, and this is kind of the best I could find. Did you know that EPD is one of the biggest exporters of liquefied petroleum gas in the world? I mean, that's bigger than a pizza order on Super Bowl Sunday. It's big. This is a big, powerful company that loves rewarding its owners by returning dividends to them. But what about the negative side of the business? Remember I said every investment has a negative side. So before you trade options in it or trade the stock, you want to understand the negative side of every business. When it comes to EPD, your problem might be the oil drama you see that goes on in the world from time to time. So even though it doesn't produce oil, if oil prices crash or politicians start to get upset or throw their hands up about pipelines, well, it could pull EPD into that drama. The best example I thought of is a dodgeball referee. They're not playing the game, but they may get nailed by a ball every once in a while. That's EPD. If there's oil drama, well, it might get nailed. Now let's look at EPD's numbers so you can decide if you think it's worth considering further. Remember, I encourage you to do more research than what I'm showing you here. This kind of just gives you a place to start. So now we're back on Seeking Alpha. We're going to go through some of their metrics here. First thing I want to point out here is just in the top right corner, it has rating summary. And notice that with Seeking Alpha analysts, they rate it as a buy. Wall Street, also a buy. And the quant rating is a strong buy. However, when you look at the numbers, it doesn't look quite as interesting as Amazon. For example, notice here with the PDE non-GAAP, that's actually trading at a premium of 2.4% over the past 5 years. So at EPD, I didn't really show it as trading at a discount until I looked at beyond that 5-year mark. We look at the 10, 15, and 20-year mark, then at that point, it's trading to a discount from where it normally trades at. But let's go down a few more metrics. So look at this one here, EV to sales. And notice that it says it's trading at about a 14% discount. Then if we scroll down here to price to sales, notice it's trading for about a 10.9% discount, so just under 11%. And that includes the trailing and the forward projected price to sales. And now we get to cash flow. Notice that the price to cash flow metric is trading actually at about a 7.6% overvaluation. So just kind of keep that in mind. Again, this is a metric that if you look at the longer term prices, the 10-year, the 15-year, and 20-year, well, it's actually trading at a discount. But when you compare it to the 5-year, it's actually trading at a premium. So here's my key takeaway when it comes to EPD for you. In a nutshell, in my opinion, EPD is currently undervalued if you look at the longer time frame. If you look at the 5-year time frame, it's actually slightly overvalued. But if you look at the 10, 15, or 20-year time frame, as you see here, the 10-year time frame, the average PDE is about 14.5. When I'm preparing for this video, it was trading for about a 10.8 PDE. So if you go with that valuation, well, EPD is trading for about a 15 to 25% potential discount. So if you like dividends, and you're okay with not having a whole lot of growth like maybe you would see with Amazon, EPD is a stock you might want to consider. So I've given you growth lovers a stock in Amazon. Then for you dividend lovers, I've given you a stock in EPD that I believe is currently undervalued, and I'm accumulating some shares. The third one is a momentum play. These are stocks I believe have the potential to really shoot up in price really fast. But as always, I want them to be at least somewhat undervalued. The next stock I'm going to share with you is one that I bought outright. I did an option play known as a risk reversal. Then as the stock went up, I took the risk off. When it came back down, I did a new risk reversal. And so I've been in and out of the stock probably more than any other stock I've been trading over the past several months. And I believe over the long term, it has the potential to go way up in price. But this stock that's been my hot potato over the past couple of months is SMCI. Now let me tell you a little bit about SMCI before we dig into some goods and some bads about it. First, as you see here, SMCI might be called your AI hardware hero. You see, SMCI makes servers that are kind of like the gym rats for computers. They're strong, they're lean, and they're ready to do AI's heavy lifting. So when NVIDIA needs a buddy to show off those chips, it calls Supermicro, otherwise known as SMCI. The second thing I like about SMCI is its build a server workshop. I don't know if any of you had kids, but it used to be this store that we used to go to when I had kids that were younger. It was called Build-A-Bear. You go in there, you design this bear however you want. It was like really expensive. But every time we were in the city where that store was, we had to go build a new bear. Well, that's what SMCI is. They have a build a server workshop. The reason why I call it that is because SMCI lets its customers basically design whatever product they want, and then they produce it for them. You want more memory? No problem, done. You want more power? Oh, we got that too. What about extra sauce? Yep, they got whatever you want, they can produce it for their customers. That makes them extremely valuable to their customers. And then for those of you who've been watching my channel for a while, you know I'm not big into hype. I like investing and trading in proven companies. But one nice thing about SMCI is that it actually is riding the hype. It's on the AI hype chain. AI is one of the hottest words over the past 15 months. And SMCI is in that business and it's executing really well at this point when it comes to AI. So I gave you the good side of SMCI. Now let me give you the potentially scary side, okay? Because again, you want to know both sides of the equation before you invest or trade in a company like SMCI. Just know this stock, it can really move in either direction. Just pull a chart up. You'll see it's going way up and it's going way down. And it does it really fast. It's like a super fast roller coaster. And if Wall Street thinks that the demand for AI might be cooling off, well, watch out below because SMCI really could drop, even though it's already dropped over 70% from its recent high. So just know that if you're trading in a company like SMCI, although it is profitable, it produces a great product that a lot of great companies need, the stock price can move around quite a bit depending on how the market views it. All right, now let's dig into the numbers for SMCI, otherwise known as Super Microcomputer. When we're looking for momentum plays, I want that stock to be undervalued. It's not like it's a dividend stock where it's okay if it's fairly valued because you get that nice consistent dividend. With the momentum play, you want the stock to be undervalued. So let's review the metrics here for SMCI. Now first we look at P/E non-GAAP. Notice it's trading on its 5-year average at about almost a 35% discount. If we scroll down here to EV to sales, it's at about a 28% discount. And if we look at price to sales, it's at a 29.55% discount. And the forward projected is at a 21.15% discount. And finally, you see the price to book is at almost a 25% discount. If we scroll up here to the rating summary, notice that Seeking Alpha analysts are rating it a buy, and Wall Street and the quant ratings are both a hold. So here's my Cliff Notes version for you if you're considering trading in SMCI. Over the past 20 years, SMCI is traded at about a 14.6 P/E. Last year, it got as high as a 60 P/E. And when I was preparing for this video, it's trading for about a 13 P/E. So potentially about a realistic 20 to 40% discount for where it trades at on average. So as you see here, SMCI, it's a potential situation. We're looking at a company that's historically undervalued to some degree, but is also riding that AI hype chain. Just keep in mind, if you're gonna trade in it, you really wanna strap your seatbelt on because this thing's like a rocket and it could take off in either direction at any time. So you wanna be prepared for that if it were to go against you. And of course, we can always deal with it when it goes our way. So what do you think about these three potentially undervalued stocks? Is Amazon, EPD, or SMCI a stock you consider buying or trading options in? Let me know down in the comment section below. If you'd like to get an alert whenever I buy stock or sell options like the ones I mentioned in this video, consider the benefits of becoming a Patreon down at the link in the description below. If you'd like to see the trick I use to finding potentially undervalued companies to buy outright or to trade options in, check out the video at the link above and the description below entitled Discover Undervalued Companies Instantly. Until next time, happy investing, and we'll see you again soon.